Ladies and gentlemen, welcome back to another Stock Review Saturday. Today we're going to be taking a look at Inseego Corp, a company that specializes in 5G communication and that sort of area of expertise. Now, in recent weeks, they've shot up from around the $6 mark, $7 mark, all the way up until $16. Now, I was lucky enough, thanks to a random kind of half-guess post I saw online on Zacks.com, where I previously spoken about it, managed to get in about $7, $6, and ride this up to, $8, and ride it up to about $14, where I bailed out purely because I was a half guess, and luckily I got a 66% return. And now essentially I'm looking to get back into it, but we're going to take a look at why did I bail out, why am I looking to get back into it, and what caused this almost massive increase in the last few weeks. Now, starting off, the big news coming in that first started to take off was that 5G technologies, in terms of, I think it was T-Mobile or somebody, are going to use Inseego chips or communication or something to do with the Inseego products are going to be used in 5G technology. These are the hotspots, and the Wi-Fi chips are going to be used in some of the 5G technology, which is obviously an industry that's booming right now. It's going to take off very soon. And then furthermore, recently it's been announced that their technology, their 5G technology, is going to be used in connected cars, which have sent the stock essentially flying. Now, as I said, sold purely because, I saw that this Brian Miller guy sells 493,000 of the shares, the director, which is always a very interesting sign when a director sells such a large chunk of shares. So that was one sort of thing that kind of got me worried. As I was saying, before that even came out, I sold my position because of the rapid rise. Sometimes that can be quite a big pullback. And secondly, this sort of thing has happened before. It went from about, less than $10 all the way up into $14, then came tumbling back down to about $8. Now, obviously, I'll keep an eye on it, and I'll look to get back into it. But let's take a look at the company's financials. Obviously, they've got a very good prospect going forward. They're at their 52-week high, and their market cap is 1.39 billion. And that would kind of imply, given the 14 USD share price, quite a high share price, there's not loads and loads and loads of shares in issue. Sometimes companies have like a share price of like 10p, but their market cap is $1 billion because they've got so many shares in the market, but their share price is lower. So they're a big company, but they're nowhere near as big as some other companies out there. I'm keen to take a look at their financials, and I think they're also approaching their kind of broker forecast currently. So let's go back one actually and look at their broker forecast. And I believe their broker forecast is about $17. Well, no. The 6 analysts have a median target of $13.50 and a high of 17. So even rarely do you see that companies approach their high broker forecast target because broker forecasts are sometimes just to skew everything and make a really unnecessary high target. But with these guys being close to their targets and above their median target, it kind of warranted me to sell it again. But nevertheless, their rise is still very impressive over recent months. So I think, definitely if they go sub 10, I will 100% get back in quite good. I mean, year-on-year revenue is increasing at 40%, which is always a good sign, especially given the pandemic. Obviously, net profit margin and net income's not ideal, but we can work with that. I'm trying to look for their beta. Their beta's not on here currently. So you can see their cash in hand's going up. They're holding a lot more cash. Companies like Apple hold a lot of cash instead of assets, I've noticed. Maybe tax, maybe they don't believe in the stock market, or who knows what they think in terms of holding cash. So their numbers are all fairly strong. They're always kind of increasing, except in December 2019, but they're always kind of increasing in the last 3 quarters. Their prospects, their revenue, their cash in hand, then operating income. So it's interesting to see what their December is going to be like. Some of their rivals are once again having a little boost over recent months. And now they're roughly at the same point. But I think, it's an industry that's booming and set to boom a bit more if you can find the right company that isn't overvalued and has good prospects. So that has been the stock review of Inseego. My current opinion is if it falls below sub 10 without any super bad news, I will definitely look to get back into it. I think it might just hover around here for a while. It's got a no PE ratio data and no beta ratio, so it's hard to do too much analysis. that's a stock that's made a bit of money recently, and I think is a very interesting one. So thank you for watching. Take care, and I'll see you again soon.